NAB was dealt a major blow at its AGM today. Nearly 90% of shareholder votes were cast against its remuneration report, the largest in corporate Australian history and prompting what's known as a first strike against the board. Shareholders are angry at the pay packets of bank executives as pressure mounts following the Banking Royal Commission. CEO Andrew Thorburn received more than $4 million last year, despite a 14% fall in full-year cash profit and a share price languishing at multi-year lows.
Embarrassed? Yes, I am embarrassed. Of course I'm embarrassed. Nevertheless, the important thing here is that we don't lose sight of the need to do what we need to do, and that's what we're going to spend next year doing.
They will absolutely have to learn from it, because if they get a second strike, that means there could potentially be a board spill and some of them may not have their jobs anymore.
ANZ also suffered a first strike today, with about 35% of votes cast against its remuneration report, surpassing the 25% needed to trigger the rule. Last week, Westpac got a 64% strike. There was some good news for our banks today, with the banking regulator relaxing investor lending rules. Over the past couple of years, the Australian Prudential Regulation Authority had put into place measures to limit loans to investors amid a booming housing market. And as you can see, those measures worked, pushing the share of investor-only loans for residential property to about 16%. That's below APRA's limit of 30%. Now, it will scrap that target from January the 1st because the banks have improved their lending practices. But with the recommendations of the Banking Royal Commission to come, it doesn't mean it will necessarily be easier to get a loan.
The banks have moved on to focusing on what your income is. Are you spending as much as you say you are? Are you spending too much on coffee, for example, or overseas holidays? And how much debt overall have you got? So the focus has changed. The focus is now on responsible lending, so to speak, and that tightness around credit standards will remain.